Let's talk about Bitcoin.
Let's talk rocket ships.
Can anything slow down the surge we have seen in Bitcoin?
It's the most popular digital currency on the planet.
Bitcoin's made some people real rich real fast, and some major companies are buying in.
The world's richest man now investing $1.5 billion.
What's happening with Bitcoin is that people are increasingly learning that it can be trusted.
So can Bitcoin be trusted? How does it really work? And what's Bitcoin really worth? There are thousands of cryptocurrencies out there, but the one most people are talking about is Bitcoin. It's a digital currency that instead of fiat currencies, it's Bitcoin and Satoshis. And one Bitcoin is worth 100 million Satoshis. But unlike the dollar, euro, and yen, this currency isn't controlled by government. That's what makes Bitcoin revolutionary, and to some people, a bit scary. It used to be simple, so countries would peg their currencies to the gold stashed somewhere in their central bank, but currencies are now paper, metal, coin, or numbers in a new bank account, and its value is guaranteed by government. It's why we trust it. We also trust the banking system to move our money, especially online. So when person A sends $100 to person B, the banks make sure that amount is subtracted from person A's account and then added to person B's account. However, banks update their ledger to make sure people aren't spending money they no longer have. For all of this to work, plus verifying transactions, banks charge fees. So what if there was a way to cut out the bank? Well, at least that was the original thinking behind Bitcoin. So the idea was first posted online in 2008, describing a peer-to-peer version of cash that you can send from one party to another without going to a financial institution, aka the banks. Its creator or creators used the name Satoshi Nakamoto. It was a wake-up call, exposing risky banking practices. Many people lost everything, including their faith in the financial system. Coincidence or not, Bitcoin showed up at the same time, and 11 years later, it's still going. Bitcoin is not controlled by a government. It is not a bank or a company. It's not a Ponzi scheme, as some say, even though it can be following the wrong channel. Instead, it's open source software that runs itself, or more accurately, it's run by lots of people on a decentralized network using the peer-to-peer frame. So here is how. First up, it's called a cryptocurrency because Bitcoin uses encryption to keep it secure. And instead of bank accounts, people trading Bitcoin have two keys. One is private and the other public. They are not actual keys, but bits of encrypted code that fit together. If person A needs to get Bitcoin to person B, they send it to the person's B public. Think of it like the number on an ATM card. Person A uses their private key to encrypt the transaction, and person B uses their private key to decrypt the transaction and then collect their Bitcoin. Those private keys are like the PIN on the ATM card. Now, instead of a bank verifying that transaction, it is done by a huge network of computers around the world, and they all have identical copies of Bitcoin's ledger. It's a record of every transaction ever made, and it's constantly being updated. So if there's some kind of fraud, the whole network knows about it. That decentralized ledger is called blockchain. See this video to know more on blockchain. Bitcoin transactions are bundled and linked together, and each block contains a bit of code from the previous block called the hash of the previous, creating a chronology that is supposed to be impossible to mess with. So who are these witnesses? Well, they are actual people called miners with powerful computers. Miners used to do it all on their own, some still do, but Bitcoin's grown and now it takes so much computing power and much more energy. So miners often bound up together in what are called pools. Some of them build huge warehouses of servers called farms. There's a lot of energy involved. A Cambridge University study says the entire global Bitcoin network uses more electricity than Argentina. But what's in it for all those miners? Well, remember, Bitcoin isn't a company, so miners don't get a salary for adding to the blockchain. Instead, the system rewards them in Bitcoin. So transactions are actually floating around in the Bitcoin network like in a waiting room, ready to be verified. Miners look for new transactions to bundle them in blocks, but before they can add them to the chain, there's an extra security check that is pretty unconventional. Mining computers have to compete to solve a coding puzzle. If a miner solves a problem first, the block and the transactions inside are therefore added to the blockchain, and that miner is rewarded with some Bitcoin. Another appeal among Bitcoin fans is the idea that Bitcoin is seen as a hedge against inflation. Other currencies suffer when, for example, more money is printed and then weakening its value. Bitcoin gets around that inflation problem by capping its supply at 21 million Bitcoin. At the moment, roughly 17 million Bitcoin are in circulation, but there are a few million missing because some people have lost their private keys. So how does all the remaining Bitcoin keep its value? Well, the system slows that supply down. One way is by cutting the mining reward down every 4 years. In 2009, the reward was 50 Bitcoin for every transaction added to the blockchain. 4 years later, it was 25, and so on and so forth. In other words, it's basic supply and demand. Bitcoin supply is capped while demand grows, well, at least for now. So more people are coming around to the idea that Bitcoin could rival gold, probably eventually. So far, Bitcoin value as against other currencies has been a far cry from stable. It's gone up and down like crazy. One of the big runs was when PayPal said it can allow its users to buy, hold, and sell Bitcoin. The bear market set in most recently when Tesla, Elon Musk announced that Tesla will no longer be accepting Bitcoins for transactions. That actually affected, as we currently see, the bear market. Not everyone gets it or believes in it. Yes, companies like PayPal, Microsoft, MasterCard accept Bitcoin, but its use is limited. Whilst crypto enthusiasts think that the value of Bitcoin is even going to climb higher, to the point where one Bitcoin is worth even a few $100,000, others say it's just a bubble. There are other concerns with Bitcoin too, like you forget or you lose your private key, for example. There is no customer support to call. There is no customer service to attend to that problem. Another issue is Bitcoin being misused, so criminals like it because it is anonymous. However, regulators are already looking into that. In an article released online, one of the concrete reasons for the CBN placing a ban and stopping all banking institutions from processing crypto-related transactions in Nigeria was also because of the money laundering scheme. In a grand scheme of things, Bitcoin is still a brand new concept. Some people are willing to take a big financial risk to chase a potential fortune. Others think that there is no way a piece of code can worth tens of thousands of dollars. It all boils down to trust, like any currency. For Bitcoin to work, enough people have to buy into it. Let's talk about getting started. To get started in buying Bitcoin or any other crypto assets, there are a few things you should know. Note that experience and a good understanding of this class of assets is needed as it is highly risky. You can lose all of your investments or gain more return on investment. So first off, there is something called cryptocurrency exchange. Cryptocurrency exchange is a business that allows customers to trade cryptocurrency or digital currency for other assets such as conventional fiat money like your naira, your dollar, your euro, and your yen. Starting a Bitcoin exchange involves certain steps, namely, decide where you want to do business, learn about the relevant regulations in that area, partner with a bank or payment processor, establish a transaction history and liquidity on the exchange, implement best security practices, and then offer customer support. However, there are already existing exchange platforms where you can buy, hold, and sell your crypto assets at any given time. Platforms that fall into this category include Coinbase, Binance, and Kraken, and lots more. These exchanges, however, are private companies which offer platforms where customers like you and I can trade our crypto assets. To get started on these platforms, you must register and provide valid means of identification, also known as Know Your Customer, or shortly called KYC. So basically, there are a set of rules that describe how two applications interact with each other. In cryptocurrency trading, these rules bundled up as a program allows you to connect with your preferred exchange, giving you access to real-time market data, make trades, and manage your account. This program is called Application Program Interface, or shortly called the API. Here is a list of some APIs: Binance API, Bittrex API, Poloniex API, Coinbase API, and then Kraken API, amongst others. But to own this type of asset, you need to have a wallet. A wallet is simply a device, physical or a program or service which stores the basic and or private keys for cryptocurrency transactions. In addition to the basic function of storing keys, wallets offer the functionality of encrypting and or signing information, and then lastly, holding your crypto assets. An example of a wallet is the popularly called Trust wallet. With this, users and holders can send or receive cryptocurrencies to the designated address. There is obviously a lot more on Bitcoin and other stuff that we didn't have time to get into. I am sure that by now you have clearly gained a basic understanding of the cryptocurrency space enough to take action. Remember guys, keep learning and improving your knowledge, and help to like this video to help other content such as discover content like this. Thank you guys for watching. My name is Ovo. Do well to subscribe, do well to like. Thank you guys for watching. Thank you for liking, thank you for subscribing. I hope this video was highly informative. Do well to share this video amongst your friends.